What can stop this rally in gold? And next week's going to be a big week. We've got earnings galore. We're back in earnings season. We've got US exceptionalism. We just came off some great US data this week, pushing the stock market to all-time highs. Can that continue? Will the dollar benefit from it? Because we're going to get US PMIs, but also Eurozone and UK PMIs. Lots of things are happening this next week. And my name is Blake Morrow. You're listening to the Week Ahead video. We're going to cover all of that and more in this week's video. But I'll tell you what, gold at all-time highs, we're going to talk all about that because this market seems unstoppable. And I try to put together arguments on what could really, stall the move in gold or maybe reverse the move in gold. And maybe once there's an escalation. We were talking about that on this week's F.A.C.E show, and that's something that we'll be discussing right here. Let's dig into it. Let's dig into the markets. But before I do that, I just got to mention that if you haven't tried out Forex Analytics, it is $1 for 10 days to try it out. You can download the mobile app. You can get inside of the application that you see here. You have all these great tools like the data flash, which is instant news releases when they're released. You have a live squawk feed, you have a risk management tool, you have analysis on 30 different products. It's not even just currencies. I know we say Forex Analytics because that's the name of our company, but we have the dollar index, we have the S&P, we have crude oil, we have boons, the 10-year bond market or 10-year notes market, and the DAX, the German DAX. We have a lot of different instruments that just are not just currencies. So make sure you download it. And you know, one of the best things about being in the Forex Analytics community is, or being a Forex Analytics subscriber, is being in a community and being able to chat with not only myself, but other Forex Analytics analysts and talk with other traders that have similar ideas to you and, interact with them. You can talk to me and have conversations with me personally where we jump in and out of what we're going to do with the dollar yen. And not only the general chat room, you have a trades room, so you know exactly what positions different traders are taking, myself included. I told here I took a loss in the euro dollar. I talk about what I'm in, and then you have like the macro chat room, the flowonomics room, where all the guys who like to think about why the market's moving are in here. We have a Spanish chat room. So there's so much available to you. Make sure you take advantage of that in the Forex Analytics community. It is a huge benefit of being in a community and being able to talk to other traders that are like-minded, just like you, that are trading the markets, wanting to learn what's going on, and finding some of the best opportunities out there. All right, so with all that being said, let's jump into what we're thinking this week going into this next week and what all the different events that might move the markets. Like I said, it's an earnings week next week, which is going to be pretty important. But what we've seen this week is we've actually seen here at the very end of the week is a reversal in this dollar strength. And I want to kind of go over that just right off the bat because we were discussing this week about the economists basically the king dollar on the Economist front page. And as soon as they did that, the dollar has peaked, at least for the week. But take a look at this big reversal candle. The euro actually reversed, the dollar index reversed from some pretty key levels of resistance. You can see it's right here at a 618 retracement. Now, let me delete this one. It's going to clean it up just a little bit. Oh shoot, you know what I need to do? I need to jump on my week ahead charts because these are the charts that I actually draw on all of these videos. There's a couple charts that I use universally. One of them is the dollar index. I not only draw on this chart for you guys and gals for the week ahead video, but also if you're looking at the dollar index and the basic technical analysis, the same chart you're going to see here in my analysis throughout the course of the week, you can see is all written out every week, all week long. You can go back and read what I have to say about the dollar index. But I do want to tell you that we rejected the 200 DMA. You can see it right there. Also previous support, current resistance, 618 retracement. So it makes sense technically that the dollar would reverse here. But like I said, next week's a very big week for economic data. It's towards the end of the week, but we have PMIs out of the US and Eurozone and UK. And we have seen, and this is something that that most of you know, the U.S. exceptionalism story is real. I mean, consumers are spending, our stock market is strong, real estate prices are holding up. And as a result, inflation, higher inflation or not, over the last couple of years, we have a strong jobs market, and we have consumer spending, and that continues to be real. Now, will this continue into the election and into the end of the year and going into 2025? We'll see, but we really need to see the data, and a lot of the data, like the weekly the monthly PMI data between the U.S. and some of these European countries, that's going to be what could actually turn the dollar if we start to see U.S. PMIs weaken, and maybe the Eurozone and UK PMIs maybe stabilize, or vice versa. Will we continue to see this big divergence in these countries? So, and that's going to move the dollar quite substantially overall. And it's not just a euro story. It's not just a dollar story. It's also, a Japanese story too. The Japanese economy is, trying to reemerge and be able to raise rates for the first time as they started doing so, and the first time in decades. And as a result, we're seeing a divergence of monetary policy, which is also putting some volatility in the dollar. So anyway, that's something that's going to be happening this week that we're going to talk quite extensively about. Now, one of the other things I do want to discuss regarding this next week is that there's a lot of Chinese data, and we're going to start off on Sunday with the China loan rate for the 1 and 5 year rate. Now, there wasn't a change on the last rate, but as you guys know, and let's go look at the China 50. I think that's a great market to start with, and probably one that we can just talk about. You can see that the CNH, or the China 50, we basically found support where we talked about it. I know we talked about it over the last, I wasn't sure if it was the last week ahead video or maybe the week before. You'd have to go back and take a look. I don't know right off the top of my head. But you can see how the Chinese markets did find buyers this week at the 618 retracement. We figured it was going to be a buying zone. 618 retracement, previous resistance. It's acting as support. And there's a lot of other, this is one of those levers that China could actually pull, where they could actually, reverse, and reduce the rate on some of these short-term loans, which they could do at the end of the week too, which we'll talk about here in a second. But that's going to be Sunday night, so keep an eye on their 1 and 5 year loan rates. That's something that I think could garner some attention. Monday, we got a lot of Fed governors speaking. And by the way, you can follow along in the economic calendar on investing.com if you want. While we're discussing this. I am filming on a Friday, so you can see the data is still moving. It's Friday afternoon as things have kind of slowed down, but it doesn't mean that the market's not still, market's not still active. It still is. But, you talk about Monday, and we have Kashikari, we have Schmidt and Logan who are speaking. So, and by the way, we're going to have a lot of Fed governors speaking throughout the course of the week. Matter of fact, there's, Lagarde speaks a couple of times from the ECB, or is going to be speaking throughout later in the week. We also have Andrew Bailey from the Bank of England is going to be speaking a couple different times. We'll talk about that as we move along. So once again, Monday we got some Fed speak, not any real economic data. We got a 3 and 6 month bill auction that's going to be coming off on Monday. We go into Tuesday. Now, Tuesday, it is the beginning of the BRICS summit. Now, I should talk a little bit about this just because there's been some speculation that the BRICS summit might, have further talks about putting together some sort of BRIC currency to offset, to do transactions offsetting the dollar. Now, I believe, and I've said this many times, not only on the week ahead video, but on our free shows that we do throughout the course of the week. And it's not just myself and other analysts at Forex Analytics. We kind of express these views. Look, we live in a dollar-denominated world, Is the world trying to move away from the dollar, and will it eventually happen? I think it's an in-process type of thing, and this is, keep in mind, this has been happening for not only you know, the last year or anything like that. This has been going on for years. We have a lot of countries that are trying to move away from you know, just utilizing the dollar. Will they be successful in their endeavor, and is it something that can move the market immediately? The answer to that question is I don't think so. And it's because we're in a dollar denominated world. You can try to make some rules and some you know, some ideas that might benefit certain countries, but in all actuality, when they need to get paid and they need to reconcile you know, payments between countries, they tend to factor in the dollar at you know, in some way, shape, or form. So being in a dollar denominated world, it's not as easy as just flicking a switch and switching and not trading or utilizing dollars anymore. But do I think it's going to eventually, do I think countries will move away from the dollar eventually, and not be so dependent on the dollar? Absolutely. But it's something that happens over time. It's not something that's going to happen on a one meeting or a set of meetings basis, unless we have another type of you know, a summit like we had when we came off the gold standard, and then the dollar dropped precipitously, especially against the yen. You know, something like that could happen, obviously, but you know, these BRIC countries getting together and trying to devise a plan. Will they be successful, and do they actually have a plan? We'll see. But anyway, Tuesday the BRICS summit does start. Tuesday also we have, like I said, Andrew Bailey. He is speaking, and let's take a look at the sterling. And I think sterling is an important currency to be looking at, just because we talked about last week how critical this level was going to be around the 130 level. What's more important to me, which with what happened this week, and I'm going to delete these, we drew that last week, is you can see this previous triangle, and I'm gonna actually make that a different color. Make that, whoops, I'll just use this red right there, and I'm gonna make this one red as well. You can see we basically are respecting the triangle breakout point. So what that means to me is that the lows this week are incredibly important. And I know, as you know, we're halfway through the month of October. As we get into the end of October, we're going to be looking at the UK budget, and there's a lot of people that are pretty bearish sterling as a result of that. But what I'd be looking for personally, you know, a sustained break below 130, and you can see we're trading at 130.39 currently as I'm speaking. A sustained break below 130 would be, I think, a bearish event. We tried to get below it this week, unsuccessful. But you can also see it's a 38% retracement of this entire move, right? And so this week's lows were basically 129, I believe 60. Let me double check that number. 129.73, that was the low this week. And so we have to really get below that level for me to turn bearish. Now remember, Andrew Bailey is speaking on Tuesday. I think he speaks actually on Thursday as well. When we get to there, I'll check that out. But keep an eye on sterling. We have the Richmond Fed data. It is, just so everybody knows, it's Friday, and I get up really early in the morning, and it's Friday afternoon. And sometimes the words just don't come out the way me's supposed to think that they're going to come out. So they just don't come out correct in the right way. You know what I'm saying? Just kidding. Okay, but I'm not kidding about that. So we have the Richmond Fed on Tuesday. We have Christine Lagarde, who's also speaking on Tuesday. Matter of fact, you know, we just came off the ECB, and I'm going to go into the euro actually when we go to PMI. So just stand by. But just to know, Christine Lagarde, she is speaking. It's kind of late in the afternoon in New York time. She's participating in a panel discussion titled "The Future of Cross-Border Payments: Faster, Safer, Together." So, you know, is she going to be talking about monetary policy? Not 100% sure. All right, Wednesday. We get into Wednesday, and I actually want to take a look at the South African Rand because we haven't obviously talked about it in a while, but you can see when we broke down, it gave us the move we looked for. Now, here we are, fast forward several weeks later, and, you know, the US dollar South African Rand still looks, in my opinion, still looks vulnerable. And let's get rid of this 161% extension. I think we can get rid of that, and we can get rid of that for now. Wednesday, we have South Africa inflation data. So what I would do from current levels is I'm going to just take this entire move. You can see from this high to this low, and let's make that a fib level. And you can see that the 38% retracement comes in right around these highs. So it comes in around 1794. If you guys want to play the US dollar South African Rand on the short side, I think that's the best place from a risk reward perspective. That's the best place to take advantage of it, because not only do you have, you know, the 38% retracement, you have the underside of a broken triangle. There's your triangle. And you have a lot of resistance horizontally. So if like inflation is weak, which, you know, that's been the general trend that we've seen in the last several months with most economies. If inflation continues to weaken, that might be what puts the US dollar South African Rand up around that 1790, 1795 level. And like I said, that's probably going to be a good risk reward to be on the short side. Should we get there? I'm not sure if we're going to get there, but we do have that data on Wednesday. Also, this is a really important one to me. Not necessarily the data for the US dollar Mexican peso, but we do have Mexican retail sales on Wednesday. But I want to spend a little bit of time discussing the US dollar Mexican peso and actually what I'd like to call the Trump trades, right? Think about what the biggest beneficiaries are in a Trump environment, Trump second presidency environment. Who are the biggest winners and who are the biggest losers? Well, that's what the market started looking at this week. And one of the biggest losers, as we've discussed here on many occasions on the week ahead video, would be the Mexican peso. You have a new incoming, or you have a new government, you know, and Miss Scheinbaum, or Presidente Scheinbaum, she's gonna have her hands full with the President Trump. You know, I'm sure he's going to talk pretty tough, and some of you might say he might say some other things too. Regardless, he's probably going to play really tough with, you know, Mexican imports, the car industry, the auto industry, energy, the border, immigration, and so as a result, one of the things that could happen in a Trump presidency is you're going to have the peso probably weaken quite substantially. We've had this conversation multiple times throughout the course of the week. And if you guys don't know where to get to our weekly shows, just go to our website and go to where it says webinars. And we have two shows that are public, that are free public viewing. The Flow Show, which is during European hours, hosted by Ryan Littlestone. Then we have the F.A.C.E show every morning, every trading day, that is hosted by Dale Pinkert, and it's got myself and other members of the Forex analytics team, and we talk quite extensively about the Mexican peso each and every day. And so I'm going to actually alter my charts because I'm long dollar Mex, and I'm expecting a much bigger breakout higher because, frankly, I think Donald Trump is starting to really lead in the polls, and there's a good chance that the dollar Mexican peso is going to you know, rally quite substantially as a result. So you know, if you look at this from a technical standpoint, let me delete some things because I don't think we need these anymore. Okay. If you look at it more as a triangle, and let's delete some of this other stuff. You look at it as a triangle, and you look longer term. Let me get myself off of here really quick. And you go, okay, well, this is the COVID lockdown spike high. And now we have broken a descending trend line. We're at the 38% retracement. Where's your next stopping point on a breakout? Well, if we break this triangle higher, that's going to take us to 21. And if we break through the 50% retracement, the chances are is we're going to be making our way towards 22, which is a 618 retracement and also horizontal resistance, as you can see here. Now, the question that you might be asking is, could the dollar Mexican peso break out higher ahead of, election night? The answer to that question is yes. I mean, the market is trying to price in what they think is going to happen. And right now, it's looking increasingly likely. I know we still have a couple of weeks, and I know the polls are extremely close, but the market's trying to price in a Trump presidency. And I would not be surprised to see an upside breakout in the US dollar Mexican peso as early as this next week above 20. And frankly, if we get above 20.25, which is right here, we should take on 21, which would be the next stop on a breakout of the US dollar Mexican peso. Now, why did I talk all about this? Well, we have Mexican retail sales on Wednesday, so keep that in mind. One of the big events of next week is going to be the Bank of Canada rate decision. Now, you and I, we've talked a lot about the dollar Canadian. I was looking for hopefully a dip in the dollar Canadian. It did not happen. It just instead stayed really bullish. And the fact of the matter is, and I'm going to delete this, is the dollar Canadian still looks extremely bullish. And what would be very bullish, in my opinion, would be if we actually break. Now, if we're developing, pennant, which I think we are, if we break the 138.40 level, we're going to finally make that move to 140 and maybe even beyond, as I've mentioned to you guys here on the week ahead video on many different occasions, how ultimately I think the dollar Canadian is going to make it to 140. Well, that's going to be how we could possibly do it as early as next week, because we do have the Bank of Canada rate decision next week, and that's going to be on Wednesday. And yes, is the market expecting a rate cut? Absolutely. The market is expecting probably a 50 basis point cut. Now, the question will be, what we'll all be asking is, following that rate decision, does the Bank of Canada start to really prep the market for further cuts above and beyond, and maybe even at the same pace? That is and could be the catalyst of continued Canadian dollar weakness. All right, like I mentioned earlier, we have Christine Lagarde speaking again. She is speaking again on Wednesday. Let me double check what she is speaking about: Europe's financial challenges at the Atlantic Council in Washington, D.C. So she is speaking on Wednesday morning. We also have existing home sales on Wednesday. We also have the RBNZ OR, who is speaking. Now, let me see where OR is speaking at. RBNZ OR is speaking about the monetary policy at the Peterson Institute in Washington, D.C. Now, this is going to be a big one. Let's let me take myself off of here and do a little bit of drawing with the Kiwi. Now, as you guys can see, the New Zealand dollar is stuck at the 618 retracement. I was having a conversation this week with Chris Weston of Pepperstone on the Trade-Off Show. That's our weekly trade-off show that we do between him and I, that's hosted by Pepperstone every single week, and we've been doing it for about 3 years now. He thinks that the RBNZ might be preparing for a potential rate cut that could send the Kiwi lower by lowering rates by 3/4 of a basis point. Now, OR is speaking on like I said, it's going to be on Wednesday, and so the reason why I mention that is because if we break this support zone, which we've had drawn here, this is where it turns really bearish. But I also have to note that you can see the 618 retracement. We continue to consolidate around here. So if he doesn't lead the market down that path, or expectations down that path, we could actually see a big reversal in the Kiwi higher. Do I think we're at a very pivotal area? Absolutely. That is why we are discussing it. All right, continuing on. Moving right along, we have the Beige Book on Wednesday. Andrew Bailey is speaking once again. Then on Thursday, we have Norway inflation data. Now, I do want to talk about the US dollar Norwegian krona. It's actually one of those currencies that I'm watching very, very closely. Why? Well, let's just go out to a weekly chart. And then let's zoom in. And then let's take a trend line, which we're going to take this red one here, go to the very top of that spike that was following COVID lockdowns, and let's drop it across the top here. Now what do you see? We see a triangle consolidation, and we're getting towards the upper end of that triangle consolidation. So that means that we have major resistance upcoming right here around the 1105 to 1110 level in the US dollar Norwegian krona. Do I think it's big? I think it's huge. I think it's ginormous. And I think that we need to watch this very carefully on this approach, especially if we have weak inflation on Thursday. Now, like I mentioned to you guys before, Thursday is going to be a big day just because we have Eurozone, UK, and US PMIs. I already showed you the dollar index, so let's go into the euro. And the euro has now completed. Oh, look at that! This is from last week. Oh, I'm glad we got to actually draw that, and you guys can see what I drew from last week. So last week I said here we are, and we can drop back down to complete the double top, which we did, and bounce, which we are, right? Even today, right now, we are at our highs of the session. So let's delete this from last week. These are all the drawings from last week, and you can see how pretty damn accurate it was. As a matter of fact, I'm going to stop here really quick and let me put those lines back on for you. I'm just going to say this. If you guys think that these videos are beneficial to you and helping you prepare for your trading week, helping you identify where the key levels are that are utmost importance to you, make sure you give me a thumbs up. Give the team a thumbs up for getting this edited and out to you via social media and emails and newsletters over the weekend. And jump down in the comments below if there's something that I missed. Please, I'd appreciate it. And I know all the other traders would appreciate it as well. Okay. Or other people from my team would appreciate it as well. Okay, so what we're going to do is we're going to delete all that. And now the question is, now that we've done that double top and we've completed it, how far can we rally before we, start to see some selling in the euro? And what I'm going to do at this point is I'm going to get rid of this previous triangle. I'm going to delete that because it's going to be too much of a mess. And what I'm going to do from here, let's delete this fib level. Let's start looking at Fibonacci retracements from the high to the low, since that low looks to be confirmed. So I would say any move back up to 109.07 to 109.60, somewhere up, those two levels are going to find resistance. Now, how far do we go? How far do we rally until we reverse? Your guess is probably just as good as mine, and probably has more to do with the PMI data that's being released on Friday, or on Thursday, excuse me. We also have the UK PMIs, which we talked about sterling and about how important this 130 level is. And we also mentioned that we have US PMIs as well. Now, one of the other things that's happening on Thursday is the Mexican inflation data. So we have retail sales on Tuesday, on Wednesday, we have Mexican retail sales, right? We already discussed the Mexican peso, but we also have inflation data on Thursday. Okay. Also in the U.S., we have unemployment claims, new home sales, and some other data. Now, Thursday night, we have Tokyo CPI. So let's talk about the US dollar Japanese yen. We were just having a conversation in the Forex Analytics chat room, if you go into the general chat room, and I want to just go over a little bit of a conversation I was having with Simon earlier today. And you can see we are discussing about expectations about the US dollar, Japanese yen. And he's asking me about the pattern in play, about the dollar yen targeting 140. And then we go into a much deeper conversation about what we are expected and you know, where things may go. All right. Remember, if you're in the Forex analytics community, you can jump in this conversation. Give us your thoughts, your ideas, you know, on why this may or may not be happening. For the dollar yen, we are turning right from where we expected. I drew this last week, and we went as high as 150.30. Now, this is major resistance, obviously. I drew this out for you last week or the last couple weeks. Why? It's 50% retracement. You also have the 200 DMA, the underside of a broken channel, which, you know, this is, by the way, this is a channel, in case you did not know, that we've been monitoring. You can see it right through here. There's the beginning of it is over here, right? Channel, underside of the channel, 200 DMA, 50% retracement, all big resistance zone up here. So we are rejecting it as of right now, but we have Tokyo CPI on Thursday. Now, would this be a catalyst that could drive the market? I don't know if it'd be necessarily the CPI that does it, or maybe just all the Bank of Japan, you know, and Ministry of Finance commentary that says that they are watching the yen very carefully, or maybe that we're getting close to intervention levels. So watch the dollar yen. I think a break below 149, which right now we trade at 149.64. A break below 149 would be somewhere around here. Should probably take us back down towards 147 in the coming days. So just watch the yen at the end of the week. One of the other things that is happening at the end of the week is we have durable goods orders, Canadian retail sales, and University of Michigan consumer sentiment. Now, I do want to go into other markets because obviously, as I mentioned before, we don't just talk about currencies here. And at Forex Analytics, even though we kind of have this niche specialty into currencies because of me and my team and what we've done over the last several decades. But we do cover other markets. So I'm going to cover gold, copper, crude, bonds, Bitcoin, the S&P, and all that. But but before I do that, I also want to mention that if you're looking to take advantage of these markets, especially we're 2.5 weeks away from the U.S. presidential election, and you guys know, and let's just pull up volatility. One of the things that's very high right now, despite the stock market being at all-time highs, is volatility. You can see volatility is very elevated. And you know what? Whether the stock market goes up, down, or sideways following the U.S. elections, one of the things that's going to be higher is volatility. And what that means is there's going to be a lot of buying and selling, up and down, rallies, sell-offs, and exciting moves that we're going to see in the markets going into next week, or in the next couple of weeks. So if you really want to take advantage of it, what I would do is go over to forexanalytics.com, check out the Trader Funding Program. And the reason why I say check out the Trader Funding Program is because we are giving you a 20% discount off your assessment. So no matter if you're trying to access $25,000 account or up to $1 million account, you get a 20% off of your assessment. And that's your total risk. It's just the cost of the assessment. And if you pass your assessment, then you get to access $1 million account or a $50,000 account or a $100,000 account. It's really a big benefit to a lot of traders. I was just meeting, and I'm not going to mention his name. I was just meeting with another trader who's been in our community for a long time. He works in the clearing business in the trading industry, and he has been part of the Trader Funding Program, and he sees the huge benefits. And guys, if you want to take advantage of this volatility that's coming our way, well, last month and this month, we have a 20% discount. Plus, if you're new to the Trader Funding Program, You actually get a one-on-one session with me, so I can tell you what to expect. I can tell you the tools that you get, which would be Forex analytics, being in our community for a certain period of time. And then I'll give you some ideas on how I passed an assessment or have passed assessments in the past. And this way it might give you some ideas on what you might be trying to do and how you might accomplish that goal as well. So take advantage of the Trader Funding Program. You can find a link down below to get involved. You can also find a link down below to our YouTube video where I explain how I passed an assessment in the past. The video is probably about a year old or something, maybe 2 years old. But watch it anyway, because I think it'll give you a lot of great ideas on what you could expect and kind of how to attack the markets as well. All right, let's get back into it and let's talk about gold, as I wanted to talk about this rally into all-time highs, as you're seeing here in gold. Well, what's going to stop the gold market? And that was the original question when we started this week ahead video. And the answer to that question is, and let me find gold. Oh, there it is. So the answer to that question is, I don't know what can stop this market. But what I can tell you is we've just broke the 261% extension of this most recent consolidation. And let me show you something else. If you look at this full 4-year consolidation, here's your high, there's your low, right? High to low. You'll notice that the 261% extension comes in at 2,800, just above 2,800. That is the same level where the bull flag pattern completion is at. So between here and there, what's going to get us to, is there any stopping points between here and there? I don't know, but I wouldn't want to stand in the way. You know, I was talking with Dale Pinkert and K-Man and Stelios today on the F.A.C.E show. Remember, that's our free show. We were discussing this, and Dale mentioned that back in when I was 18 years old, and we were at Desert Storm in the 1989-1990 year time frame. Once I say we, in the U.S. made an advance into Iraq, that is when gold peaked. And so, you know, is gold telling us this time around that maybe the only way it's going to stop going higher is when there is actual, escalation of conflict, whether it's with Iran or maybe China or, China and Taiwan or directly with Russia or other European bloc countries? I don't know. But the gold market looks extremely bullish. Yes, it's overbought, but it can always be more overbought. So just keep that in mind. Gold looks strong. And while we're above basically 2,600, which is right here, the next target is 2,800. And it seems logical that's where we're going. One of the other things we talked about last week was copper, about how copper had this big double top up here. But did you see what copper did this week? It found support at the support zone, which we talked about last week. And that's where copper found some buyers, just like China did a couple of days ago as well. All right, crude. Last week we talked about it being stuck between the 200 DMA and the 50 DMA, right? We were just kind of, oops, here, there's the DMA right here, right? And we talked about it, if we broke below the 50 DMA, we'd get a breakdown. If it broke above the 200 DMA, we'd get a breakout, right? Well, guess what happened? We broke below the 50 DMA and we've gone straight down since then. So can we, come down to this further support? Yeah. And I'm just going to say this out loud to you guys. If we break below 60 bucks in crude, there is a lot of open air below that. The only way I could see that happening is if we go into some global recessionary type of period. And then the market starts to get very worried about global growth. Okay. But as of right now, we're coming down to some pretty key support. One of the other things we talked about last week was the 30-year and the 10-year, right? We always talk about the 10-year notes market here, and I'll bring that up for you. You can see the 10-year, we have this bear flag pattern. This is one of those charts that I tend to use universally with Forex analytics and our analysis. But the other thing that we looked at last week were the ZBs, which is the 30-year, right? In the 30-year last year, we discussed about how important support this was. And guess what? We bounced off it Monday, Tuesday. We came back down, and we're trying to forge an even a very similar low, or maybe even a slightly higher low, which means that, you know, the bond market here, especially in the 30-year, if we start bouncing, that means yields are coming down. If yields are coming down, that tends to influence the dollar lower. Two last things I want to talk about is the S&P and Bitcoin. Well, look at S&P. We're closing at all-time highs, right? Now, I thought that we might get a reversal from this level. We're not. And, you know, here's one thing I'm going to say. If you guys are on the short side, it's like, yeah, we talked about 2 weeks about getting short up at these levels. Well, guess what? It's not even pulling back. So is this the time for the market to reverse? We're only 2 weeks away, 2.5 weeks away from the election, November 5th, here in the U.S. And because Trump is ahead in the polls, there's not going to be a lot of people trying to sell stocks right now, because they feel that in the event he wins, there's going to be another surge higher in the equity markets. I'm going to just tell you this right now. I don't care who wins. I think the stock market's going down. It's just a matter of what fashion. If Harris is the winner, meaning she wins the she wins the election, I think the stock market goes straight down. You know, how far? That's to be determined, and we'll be figuring that out together on a day-by-day basis on our free shows, right? And on the paid shows that we do at Forex Analytics. The flip side is if Trump truly is the winner, I believe it's going to be a buy the rumor, sell the news event. Do we sell equities the same day, 2 days later, a week later? I'm not sure. But as we've been talking about this on our free shows, I do think that the stock market will go down eventually, even under a Trump presidency. So, but what happens between now and November 5th? Well, if Trump stays ahead in the polls, then we're probably just going to continue to grind higher, unless something substantially changes with U.S. data. So, where's the next stop for the S&P? Probably about 6,000, which is going to be the channel top. And let me go ahead and get rid of that. Let me get rid of this. There we go. And yeah, it looks like channel top is going to be, and 161% extension is going to be around 6,000, right? Last thing I wanted to talk about was Bitcoin. Now, we've talked a lot about Bitcoin as of late, but look at how bullish this is. We've broken this channel. Why is that channel so important? You might ask. Well, because we talk about it every single week here, or we try to anyway, because it's a big cup and handle pattern, right? And if it's a big cup and handle pattern, just look at where the targets take us. You know, have you heard Bitcoin analysts and people talk about 100,000 Bitcoin? Well, technically, this is how it happens. You take that spike low of the handle, that takes us to basically 102,000. So if you're wondering how we get there, that's how we get there, folks. And that would be delivered probably with a President Trump second presidency. Okay? All right. So this is the point in the video, and I know we've been going along, and I'm gonna make this real easy for us for the next few minutes. This is the point where I talk about what are the best trade setups from this week, and then I'm going to talk about last week. So actually, I'm going to talk about last week's first. So let's start with number one. Trade number one, I talked about last week. Sell the euro at 110. That was my trade setup from last week. Guess what? The euro never got even close to 110. It went straight down. So that trade never happened. Trade number one never happened. Trade number two was buy a US dollar Canadian. It's kind of, I said hope if it got down to 136.50. Not even close. It hasn't even gone down hardly even a bit. So unfortunately, never got our chance to buy it at 136.50. So that's trade number two. Never even happened. Trade number three, short gold counter trend on a move below 2,600. Well, guess what's happened with gold? It's gone straight up this week. It has not even looked back. It never got back below 2,600. It just went straight up. So trade number three, the third trade idea. This is the first time this has ever happened since I've done this with you guys. None of those trades took place. So unfortunately, if you were just trading those trade ideas, you probably just sat on your hands all week, unfortunately. Well, I guess that's going to happen from time to time. Doesn't happen often, but, you know, it happened. So, 3 trade ideas, 3 of them never even took place. No win, no loss. But I have 3 trade ideas this week that I think are going to be ones to be thinking about. So, first and foremost, I know some of you are going to not believe it, but yeah, the US dollar Mexican peso, a move above 20.05, which is right here. A move above 20.05. The dollar Mexican peso, we look for a rally, and this is going to be a breakout of the triangle. Then you have a pennant, and it's extremely bullish. So that's trade idea number 1. Trade idea number 2, another potential Trump trade, is long Bitcoin. Long Bitcoin at current levels, and because you're now outside of the triangle, and add if you get above 70,000, which, by the way, 70,000 is right here. So if you get above 70,000, which is this, let me grab let me grab a new line here for you. If you break above that resistance, which is just above, I think it's 70,100, 70,200, then you can add to a winning trade on a breakout. But remember, the market's trying to price in a Trump presidency, and in order to do that, he's very friendly crypto, he's very friendly Tesla, he's very friendly stocks, and he's very unfriendly Mexican pesos. So that's trade idea number 2. Trade idea number 3. Now, some of you might remember this from a couple weeks ago when I talked about shorting the dollar yen up around this 149.50 to 150 level. Well, this week we went as high as 53. So am I short dollar yen? I am. Am I looking to add? Yes. So trade idea number 3 is short more or add to a winning trade below 149. So if we drop below 149 in the US dollar Japanese yen, we're looking for a resumption of that downward trend. And that is going to be the 3rd trade of this week. So with all that being said, if you guys and gals have really enjoyed this video thoroughly and you think it's going to be very beneficial to your trading this next week, make sure you give me a thumbs up. Subscribe to the channel. It doesn't cost anything to subscribe to this YouTube channel. And it doesn't cost anything to give me and the team a thumbs up. And jump down in the comments below if there's something I missed that you think is going to be a big market mover. Let me know. Oh, you know what? I did mention that there's going to be earnings next week. I should mention this. Tuesday, we have Google. We have General Electric. We have Texas Instruments. Wednesday, we have Tesla and IBM. Thursday, we have Amazon, Caterpillar, and there's a whole host of other companies that are going to be reporting earnings as well next week. So just keep your head on a swivel, and remember, there's a lot of Middle East tensions, there's a lot of China tensions, and we're just a couple of weeks from a really crazy and probably volatility infused election coming up in just a couple of weeks. So thank you so much for spending your most valuable asset with me, which happens to be your time. So I appreciate you being with me. Thank you very much. And I'll see you on the Monday morning F.A.C.E show. Have a great rest of your weekend. Hey traders, this is Blake Morrow with Forex Analytics. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.